Good morning, and thank you for joining us today for the SBA Economic Resources for COVID-19 webinar. We'll just be starting here in just a couple minutes. This is brought to you by Solar Power Events and our Engage series. And today you will hear from moderator Shawn Garrison, Director of Congressional Affairs from the Solar Energy Industries Association, as well as speakers Nick Rajpara, Economic Development Specialist from the U.S. Small Business Administration, and Lebo Suen, International Trade Officer, also from the U.S. Small Business Administration. Together, they will provide an overview of the SBA disaster relief loan programs. And now, please welcome Shawn Garrison to kick things off.
Hi, thank you so much. And we're just so happy today to have two reps from the Small Business Administration talking to us. We know it's been a busy, hectic, and crazy time. This webinar today is just so important because the solar industry is comprised of almost 90% entities that are considered small businesses. So we've watched what Congress has been doing and what they passed in terms of legislation around the economic injury disaster loans and the Paycheck Protection Program. So we really thank you for being on here today. And this call is very important to us because you'll get into some of the minutiae details that a lot of our companies are concerned about as they're digging into these processes. So without further ado, I'll turn it over to Nick and Lebo.
Well, welcome everyone. It is a real honor to be here representing SBA, but to be here on a webinar for the Solar Energy Industry Association. I was talking to the fellow panelist that I've been a fan and a follower of this association for a very long time. So it is an honor to be here. It's unfortunate circumstances that brought us together. This pandemic is absolutely unprecedented, and it's really causing a struggle for small businesses, not only in the DC area, across the nation, but across the world. You know, that we have taken some unprecedented action, regarding enabling small businesses to cope through this pandemic. As you know, these shelter-in-place, stay-at-home orders have really stopped business operations in their tracks and have hit small businesses disproportionately hard. And there was a lot of aid and assistance that has been coming out of the CARES Act, which was just passed 2.5 weeks ago on March the 27th, which is designed to aid small businesses. And that's really going to be the focus on the presentation today, as well as some pre-existing programs before the CARES Act. What I'm going to do is I'm going to break up the presentations along these 5 components. We're going to start talking about if you have any outstanding debt, loans, what your options are. Of course, the CARES Act and the popular Paycheck Protection Program coming out of the CARES Act. I'm just going to probably abbreviate saying PPP. The Economic Injury Disaster Loan Program, which existed before the CARES Act, but it was augmented after the CARES Act. And of course, there's a debt relief component, as well as a new express bridge loan coming out of the CARES Act. The 2 lesser known programs, but I'm going to spend bulk of my time in talking about the big programs that are widely used, where we get a lot of inquiries on. What I want to start out by saying is, at this time, your cash flow may have been disrupted, and you may have outstanding obligations in your normal course of business. And one of your outstanding obligations is probably outstanding debt. If you have outstanding debt, what federal and state agencies have done is we have reached out to the lender community and requested that they work with the business borrowers in either restructuring, modifying, and deferring that outstanding debt. Because you know that debt, those loan payments could be used to keep our employees at this time. And the federal government, the state governments rather keep their employees and rather than pay your banknotes at this time. So, state agencies, the Federal Reserve, the Comptroller of Currencies, they have issued guidance to banks asking that banks, work with their borrowers, their business borrowers, and deferring, modifying, and working out loans, and in return, federal and state regulators will not adversely impact or adversely downgrade these banks and these financial institutions for these loans, which would happen in normal times. So I just want to kind of make you aware of that. So if you do have outstanding debt, do talk to your lender. If you have outstanding SBA loans, these are SBA guaranteed loans. They're very, as many of you know, SBA does not, on rare occasions, does SBA make direct loans. SBA primarily guarantees loans made by bank and lending institutions. So if you do have existing SBA loans, such as 7A, 504, any microloans that you may have, definitely talk to your borrower, your lender. You are eligible to defer these loans automatically for 6 months. If you have disaster loans, I know that we have callers coming in from all over the nation. And some of these areas are disaster prone across our nation. So some of you may have outstanding SBA disaster loans. These loans are automatically deferred through the end of the year. I already touched on non-SBA loans and your options. Please do talk to your lender. You do have increased flexibility in deferring those payments and modifying those loans. So that should help you out during this time of pandemic where cash flow is disrupted or very limited. So the first thing I want to talk to you about coming out of the CARES Act is our most popular program, the Paycheck Protection Program known as PPP. This program has been all over the news. It has been even in news comedy shows. Everywhere you've turned, you've probably heard about this program. I encourage you to go to our website. We have a dedicated web page that is being updated constantly. The URL link is right there. /SBA, /PPP. It's our website /PPP. And this is the unique signature program coming out of the CARES Act. It is a forgivable loan. That's why it's so popular. Now it's important to know that this is not a direct loan from the SBA. You would go through your lender or another lender if your lender is not offering it. So it is a program offered through lenders, our lender community. There are folks that are non-SBA approved lenders that are also offering the program. We have also come up with a fast track expedited process to approve non-SBA lenders to offer PPP. The idea is we want to make this program available to as many small businesses as possible because we want small businesses to retain their employees and to retain their employees during this pandemic. So we are working with non-SBA lenders to expedite them to offer our PPP program. So if your current lending institution is not offering it, you might want to try a smaller bank or an alternative lender that may be offering it. What we're also doing is we are guaranteeing the loan 100% to lenders that offer it. So we are de-risking the loan made by the lender. Again, we want to make sure lenders are offering it. We want to eliminate whatever concerns they have to make the loan. And as I mentioned, we are rapidly adding new lenders that are offering PPP, even to non-typical sources such as online lenders. So there are going to be greater options of lenders that are offering PPP. Another thing we're doing is we're asking lenders, in fact, we're requiring lenders not to charge any loan fees for PPP loans. We want to make this as easy for the borrower as possible. We want to have also a uniform process in which these loans are made, these PPP loans are made. And we're asking for uniform underwriting. In fact, we're requiring uniform underwriting for all the lenders that make PPP loans. First of all, to qualify, you got to be a small business. You have to be, what is a small business? Generally is a business with less than 500 employees. And now, in some industries, you could have greater than 500 employees and still qualify as a small business, we encourage you to go to our website and to review your size standards. We have a special carve out for food service, which I'm not going to go into right now. But I'll be happy if anyone has questions on that. I'll be happy to cover it in Q&A. The loan amount for this loan is up to $10 million. And the way we come up with your loan amount is we take your average monthly payroll cost. And what that entails is not just what you pay your employees, but that includes any benefits that you give your employees, health insurance, retirement, any vacation that you give your employees, any payroll costs if you're using a payroll processor. That all is factored into your average payroll cost. We have talked to small businesses and they say, well, we don't pay our employees on a monthly basis. And that's okay. We look at your average annual payroll cost and we divide it by 12. And then what we do is that gives us your monthly payroll average. We take that number and we multiply it by 2.5, and that gives you your loan amount. The interest rate on this loan is 1%. It is forgiven 100% if 75%, at least 75%, I should say, of the loan proceeds are used for payroll. There are other allowable expenses such as rent, mortgage, interest, utilities, and other ongoing expenses, but just know at least 75% of your loan proceeds had to be used for payroll for the loan to be forgiven. So just keep that in mind. There are other allowable expenses, but you want to stay within that formula. Collateral, none required, no personal guarantee, short maturity of 2 years. The first payment is deferred for the first 6 months, and of course, there's no prepayment penalty. How do you apply? You go to your existing lender. We encourage you to start with your existing lender who you have a relationship with. If your existing lender is telling you that they're not offering it, which we have heard, or they've capped it, or they're holding on, we have a nice finder that we've included on our website. The URL is right there of all the lenders in your area that are participating in the PPP program. So you could plug in your zip code, go to the URL, plug in your zip code, and you could find all the lenders in your area that are participating in that program. And as I mentioned, we are rapidly increasing new lenders, such as smaller credit unions and community banks that are eager to offer this program. All loan terms and conditions will be same across borrowers and lenders. So, unlike some of the other programs that we have, Sba loan programs, you will get the same loan with the same loan terms and conditions, irrespective of which lender you go to who makes the loan. Now, let me talk about our other program, which you may or may not have heard of, the Economic Injury Disaster Loan Program. This program existed before the CARES Act, but it was augmented and enhanced after the CARES Act. The URL for this program is right there on the screen on this slide. I encourage you to go visit this. This was a smaller program historically for the SBA. It's become a very big program right now. The Economic Injury Disaster Loan Program, known as EIDL is also called, it is offered directly through the SBA. Whereas PPP and other SBA loans are offered through lenders, the Economic Injury Disaster Loan is offered directly through the SBA. I'm going to give you a website and a web portal which you could go to access the application. But to qualify for the loan, you have to be a small business, again, fit within the SBA size standards. Self-employed individuals and 1099 contractors do qualify. So we understand in this economy, a lot of folks are working the gig economy. A lot of folks are self-employed, they're sole proprietors. We encourage them to use the EIDL program. We're also opening up this program to nonprofit organizations including religious organizations. They were excluded previously. In fact, the SBA programs typically were for businesses, not for nonprofit organizations. But these programs are for nonprofit organizations. And I also want to say that the PPP program is also available. The previous program I was discussing is also available to nonprofit organizations as well. And nonprofits, of course, don't have to fall within SBA size standards. You could be a large nonprofit and still qualify. You could be somebody like an SEIA, and they could possibly qualify for this. Here are the folks that are, the entities that are currently ineligible for the EIDL loans. Philanthropic organizations and educational foundations that rely on donations to carry the program. Let me explain what this is. When we say philanthropic organizations, we're really talking about foundations that were created to give away their proceeds, the money that they collected. So you could be a nonprofit organization, but if you're organized to carry out a service, pick on or host SCIA, you would qualify. But if you were, let's say, the Gates Foundation, where your primary purpose was to take your donations and to give it away and make grants, you would not qualify for something like this. Educational foundations, there are, what we mean by this are nonprofits such as state colleges. They are educational nonprofits. They don't qualify for something like this. Gambling concerns. These are organizations, entities that derive over 1/3 of their gross annual revenue through gambling activities. Okay, so let me go into the nuts and bolts of the EIDL loan. You could qualify for up to $2 million under this program. The way you would qualify, let me just take a pause here and talk about how you would qualify, how the loan amount is determined. So what we do for this program is we take your gross annual revenue and we subtract your cost of goods sold, and we call that profit margin, your gross profit margin. We take that number, we divide it by 12, and that gives us your monthly gross profit. And what we do is we add a multiplier. Currently, I believe it changes, but currently I believe it is 2, and that becomes your initial loan amount. But you could qualify, and this changes, so you could qualify for up to $2 million, but that's how it works. Now, a new provision was added under the CARES Act where you could get an advance on your loan up to $10,000, and this advance is forgivable. So what we're doing with the advance program, if I may talk about that, the forgivable advance, it is not automatically $10,000. There was some misinformation that was communicated early, that's saying if you apply, you automatically get a $10,000 loan advance, which is forgivable. That's not true. It's up to $10,000, which could be forgiven if you use a loan advance to pay your employees, if it's used for payroll. So that's the intended use, and the forgiveness portion is on the advance is if you use it for payroll. And the loan advance is determined by how many employees you have. You get a $1,000 advance for every employee you have, whether they're full-time or part-time. The interest rate on this loan is 3.75% for small businesses and 2.75% for nonprofit organizations. The loan terms are up to 30 years, and the first payment is deferred for 12 months. So you would not see a note payment for the first year. That will give you some time to get back up on your feet, before you make your initial note payment. Okay, so how could you use these funds? You could use them for any working capital needs. Remember I talked about the proceeds. You should really be using the proceeds on the loan advance, the $10,000 advance for payroll, but the rest of the loan, you could use it for any working capital needs that you have, paying off fixed debts, accounts payables, other bills such as rent, utilities. This loan is really intended to help small businesses stay afloat during this time of disaster. It's not meant for business expansion. So if you're looking to make an acquisition, that's not what this loan is for. Unlike the other loans that we have, I mentioned these are not done through lenders. These are done directly through the SBA. We have a streamlined and expedited application process that we pasted the URL right there. If you have not applied already, I encourage you to go to that website. We have tried to make the application process as painless as possible. Okay, now those are the two main programs. Let me talk about some other programs. Let me just touch on some of these other programs which don't get a lot of notoriety, but they may be of interest to you. We have a debt relief program. If you have an existing SBA loan, such as the 78504, the SBA is willing to pay 6 months of your loan. That's your principal and interest, and any other associated fees. So that's a new debt relief program that we have in your existing loan. So I talked about, the deferment, but this is another provision that's coming out of the CARES Act where the SBA would provide this debt relief on your loan. So there's another conversation you could have with your lender to make sure you're getting this relief. We're also making this available to new borrowers. So if you're in the process of getting a new SBA loan, you would be eligible for this as well. Or if you're going to take out a loan, this debt relief is available to future borrowers up to loans made up to September 27th of this year. The bridge loan, this is another program. There are certain lenders that are SBA Express lenders that expedite their loans, on a fast track basis. If ask your lender if they're SBA Express lender, and ask them about this new SBA Express $25,000 bridge loan. That's another thing you may qualify for, is up to $25,000 of capital, which you could be approved for within days and also receive within days. Then again, you will be working through your lender for this particular bridge loan. And with that, I conclude my presentation.
All right, well, thanks so much. We're going to open up for questions.
So one of the first questions is that came in was about being able to apply for the loan. How many months will it take for SBA to actually process all the applications?
Okay, so I'm assuming they're referring to the EIDL loan, the Economic Injury Disaster Loan, because that's the loan that the SBA makes, processes, reviews, all of the above. So in regards to the EIDL loan, we have an internal clock, or we've had an internal clock traditionally of 18 to 21 days of receipt of the complete application of actually approving the loan. Now, as I mentioned, these are unprecedented times where you have virtually every small business in every state applying for this loan. So that stretched out the processing times much, much past that 18 to 21 day internal window that we had. So I can't give you a hard date as approval of these loans. I know that we are staffing up and surge hiring to get these loans approved as fast as possible. And I've already heard that loan proceeds are being dispersed. I just heard that this week, or actually the last 24 hours. So that's the good news. So I know people have been waiting for their EIDL funds, but they are coming through, and we're looking to get them processed as fast as possible. And as we on-ramp people, we'll be able to speed up that process. I'll also just offer my own perspective. There was a brief point in time where I actually worked in the Office of Disaster Assistance to help out, make loans, EIDL loans for hurricanes in Puerto Rico. And, you know, we did have an 18 to 21 day clock, but we were only able to attain that once we had the right staffing level. So we are going to try to get these loans out as fast as possible. Now, regarding to the Paycheck Protection Program, those loans, they're made directly by the bank. So they have their own process for that.
All right, there's another question here. Are the PPP loan documents negotiable, or are they signed as is?
So good question. I mentioned that we are looking to make this program as uniform as possible. So the loan is, you know, loan terms and conditions. We're trying to eliminate the variability to make sure that lenders are, you know, giving everyone's fair share. So for the PPP loans, there is not too much room for negotiation for PPP loan terms and conditions because, you know, because we're giving the lenders a guidance that these are the loans, these are the terms, and these are the conditions. And by the way, we're trying to make them as favorable. We've made them as favorable to the borrower as possible.
Great. And one more here. If we're still doing business as usual, can that disqualify us?
For what program? Did they specify?
Did not.
Okay, so if they're doing business as usual, okay, you know, this question's come up. It's an interesting question. I mean, these are, you know, both these programs are really designed to help businesses in need, you know, get through the pandemic. These are loans at the end of the day that you're taking out. So they're intended for a loan. So, you know, if you, I mean, there is, you know, nothing stopping you from applying. However, it's, you know, you are taking out debt. You are taking out debt. So, you know, I do not recommend taking out these loans if your businesses have not been disrupted and you do not need these programs. Really, these programs are designed for businesses that have been adversely impacted and they need the funding and they need the assistance to keep going, you know, during this pandemic.
And that includes the PPP?
And that includes a PPP. That includes a PPP. So, yeah, so it's, yeah, that's intent behind both these programs. They're meant for disaster relief.
Great. Here's another question. Is there any CARES alignment with the SBA surety bond program?
Not that I know of. I'm not sure. I could have Lebo chime in here, but I am not aware of any modifications to our surety bond program, you know, with respect to what has ensued out of the CARES Act.
Hey Nick, this is Lebo. I don't have any information on the surety bond in relationship to the CARES Act.
All right. Let's see here. You discussed the 1099 employees. Are they eligible for PPP?
Really good question, and I'm glad it was asked. The technical answer is yes, they are. They are absolutely legally eligible. In fact, we had an official launch for them to apply last week. So PPP was launched on April the 3rd. It was a fast launch. I mean, and then, but we had a stagger launch where we made the PPP program available for all small businesses that have W-2 employees on April the 3rd. Then we waited a week to offer PPP and made, you know, and made eligible 1099s. 1099. So yes, they can apply for PPP. They had to prove their payroll cost to the lender. So it's gathering that documentation and showing that, okay, to the lender, that this was indeed our average payroll cost. So they can apply. We do encourage 1099s to look at the economic injury disaster loans over the PPP. That might be a little bit more appropriate for them because it might be easier to go for 1099s to go through that process, because lenders proving your payroll costs as a 1099 might be a little bit too arduous for a lender. So the EIDL loan might be more favorable, and of course you could use your advance on forgiveness. Now let me just say something real quick while I have an opportunity to do so. People along this question, people have asked if you could apply for both, and if you're 1099, is it maybe I'll try PPP and maybe I'll also try EIDL and see where I get the best deal. And now you can apply for both EIDL and PPP. The caveat is you can't use loan proceeds. If you do get approved for both, you can't use loan proceeds for both for the same purposes. So if you get EIDL, if you get your EIDL funds and you get an advance, then you can't take that same money that you get from PPP and apply it towards for the same loan amount, for the same dollar amount applied to forgiveness. And then I could talk more about that later, but I don't want to confuse everyone, but that's the only thing. So, I hope that answered that question with a little bit more information.
Great. Let's see. And Shawn, is there anything else you'd like to add?
No, appreciate facilitating the question and answer. I guess one thing we'd like to know is, Congress is talking about adding some more monies to both of these programs. Do you anticipate changes to any of the structure of these programs when Congress does, if they do add any more money?
That's a great question. Something that we think about a lot. It's something that we can't speak to at this time because because it's pure speculation at this point on what Congress is going to do. It's our best guess. We're intently watching what they do. We could definitely use enhancements and reauthorization for some of these programs. So we're intently awaiting and watching what Congress is going to do in regards to these programs.
Okay, thank you.
Okay. I think we are good to go. Any closing comments?
This is Shawn with C. I just want to thank our panelists for being on. If they have any other things to say, please add. But thank you for your time. We know you're getting cramped now. We may dig into you again and ask you to help us out further. But I just appreciate you being on here today.
Hey, thank you, Shawn, and everyone else at SCIA. It was an absolute pleasure and honor to do this. I'll be happy. We'd be happy to help in the future. And in fact, I think as you mentioned in the last question, these programs might be enhanced, updated, augmented. So it may make it even sense to circle back and definitely do this again. As these programs are modified. We encourage all of you to go to our website. We have dedicated resources for coronavirus and COVID-19 response. Our agency is a small agency, but we have tasked to be front and center with the recovery efforts. And that's simply because so much of the American economy relies on small business. The 50 million small businesses out there, we thank you. We also thank, personally, all the great solar panel and solar energy companies out there. I've been tracking them, throughout my career for 15 years. So it's something that, that me personally, I'm excited about the work that you do. So I'll be happy to help out. Our office is delighted to be on here, and our agency is there to support you whenever you need.
Thank you, Nick. And thank you everyone for joining today's Solar Power Events Engage series webinar on SBA economic resources for COVID-19. This presentation will be made available in the coming days to registrants and on events.solar. But enjoy the rest of your day, take care, and stay safe.